Hey, what's going on, traders? This is the beginning of a video series where we're going to be breaking down what technical analysis is, what the indicators are, what the studies are. What am I looking at the chart right now? I'm going to be breaking down each and every one of these lines, what candlesticks are, what do these mean, how do you read them, what am I looking at if I'm looking at a chart, and how do you go about reading a chart and understanding, or at least trying to understand, where price action could potentially go. But I'm not going to just throw all this in your face. In order to really get a baseline understanding of what technical analysis is, you need to start from a clean sheet. So we're going to remove all of these studies and we're going to go down to the basics. Now, at a base level, when you're looking at a chart, the most important thing, or really the first thing you should really understand, is how to read a candlestick. Now, candlesticks are each and every one of these little colors that you see here, and I'll zoom into them so I can show you better. But each and every one of them has their own specific shape, and they're configured in their own ways, and they all mean their own things. I'm not going to get that in depth right now, and I will in the future, but I just want you to understand, what am I looking at here? Now, you can sort of make a good guess as to what the colors mean. The green means that it's going up, and the red means that it's going down. But why are they shaped like this? What do these shapes mean? Let's zoom in onto these right here. Now, for each candlestick, they have what we call a real body. The real body is the thicker portion that is colored in. What this means, especially for this green candle, we're going to focus on this green candle right here. What this means is that for this specific time frame, and right now we're on the 1 day, 1 minute chart. So for this specific minute, the price action opened here at this level at 565. Yeah, 565, and it closed here, 567. This is what the real body shows us. These little upper and lower wicks showcases the range to where the price happened in this 1 minute. So within this 1 minute, the price came all the way down to 565 flat, and it also came all the way up to 567. After the time frame of the candle passes, that is when it closes. So after this 1 minute time frame, we jump over to this one, and wherever the price was at this time, when we jump over to the next minute, is where it'll close. Wherever this minute started is wherever it opened. And the same goes for the red candlestick. But there's one thing to note, and I should have noted this before. If it's green, that means the open is below. So for this candlestick, it's green. We closed higher than our open. If it's red, it's the opposite, because we closed below. We lost value in this 1 minute. So for the open here, it would be on top. Since we lost value, it's red. Now, when looking at these candlesticks, there's deeper meanings to them, which I'm not going to overwhelm you with right now. But there's formations of these candlesticks. There's certain patterns that you can kind of put together and piece together that resemble a bullish pattern or a bearish pattern, and will kind of lead you to kind of understand exactly where the price might be going. But let's try to summarize what's going on here just on one candlestick, and let's put it into a story. I think that's the best way to do this right now, is to put it into a story as to what might have happened. And we're going to focus on this one down here. Now, I'm just going to give you a little bit of a future reference that will be going over in more detail in a later video. But this right here is a form of a doji. A doji is a form of a candlestick that represents what's happening within this certain time frame, whether it's a minute, whether it's a 5 minute candlestick, a 10 minute candlestick, whatever the case may be. This formation of the doji tells a story. Summarize the story here, and I'll go into more detail here in a bit. What I can tell from this 1 minute is that the bears took control of this 1 minute for a good little period of time. But towards the end of this minute, the bulls brought it back up, which is bullish in my opinion, which is where we're seeing, this kind of reversal from a downtrend. We see this doji at the bottom, reversal back to the upside. This is why it's very important to know exactly what these dojis mean, because they can kind of lead you to where the price might go. Now let's break down this doji, and if you really want to know the specifics of it, this is called a dragonfly doji. But to summarize right here what happened. For this candlestick, we opened at 565 and 26 cents, and we closed at 565 and 17 cents. But like I said previously, we didn't open or close at these upper extremities, but this is the range of price that happened within this 1 minute. And to me as a trader, if I see this and I see this long lower wick, but then it wasn't sustainable and it was brought back up, that's a bullish sign to me. That means buyers are stepping in and they don't believe that it should be going as low as this price level at 564.50 cents or something like that. They don't believe that Tesla at this time is worth lower than 564.55. So buyers stepped in, drove the price back up. They're saying, hey, you know, I want to buy more than the sellers want to sell. So that's a bullish sign, and which is where we're seeing this reversal back to the upside. Now, these formations and patterns, they're not foolproof, you know, they're just guidance. And if you can pair it up with whatever indicators or studies that you want to follow as a trader, you can start to get pretty accurate at reading, you know, what these candlesticks are showing you in terms of guidance. Now, I think we've kind of touched on what candlesticks are, what the open and close are, what these upper wicks are. Like I said, they do have certain meanings tied to them. Like, for example, this doji down here, some of them have, you know, their own names, and some of them resemble certain things. But for the most part, you understand the basics. What's the open, what's the close, and what do these lines mean at the top? That's the most important part. Then we could start to build onto formations and patterns, but that's a little bit further down the line. Now, really quickly, I want to start getting into what support and resistance levels are, because I feel like they're the easiest ones to kind of learn, as well as just understanding what the candlesticks are. So let's go out to the 180-day chart and let's kind of piece together what support and resistance levels are. Now, I'm not going to spend too much time on this. I promise I'll touch on it again in the future. I just want to throw it in here because it's one of the foundations that I believe you need to have as a technical trader, and just understanding what support and resistance levels are. So right now I'll put into words into what we're seeing on the chart. Just to give you a real world example, think of whatever you're looking at. In this example, we're going to be using Tesla. Think of Tesla's stock price as a bouncy ball, and you're in a room, no walls. We're going to ignore the walls. We're just going to focus on ceiling and the floor. We're in this room that has a ceiling and a floor, and we take Tesla's stock price, the bouncy ball, and we throw it against the floor. Obviously, if it's a bouncy ball, it's going to bounce off the floor and it might hit the roof. If it bounces off the roof, it'll come down and it'll just be bouncing against the ceiling and the roof. That is what support and resistance levels are. There are areas on the stock chart or whatever you're looking at that seem to hold the price either below it or above it. Now, with that being said, you can kind of see where these, figuratively speaking, ceilings and floors would be. For example, one of them would be right here. For whatever reason, when Tesla was trading up to this level, it stopped. That is a ceiling. That is a point of resistance. As a trader, that is important to note, because resistance, and you'll learn this a little bit later, but resistance, old resistance, let's say in the real world example, let's say for whatever reason I threw the ball so hard off the floor that it shot through the roof and it broke through the roof, and now it's above it. But at a certain point, the ball needs to come back down. What is now underneath that old roof? It's the same roof, but that has become a floor. So it's become the support. Old resistance becomes new support. And just to mark this out, let's say that everything past this point had not happened yet. Nothing past this point hadn't happened yet. And we're trading in this range right now. This is where we are currently. Ignore all of this. Let's say I mark this as a point of resistance, and we're looking at it and we're saying, okay, we've marked a previous point of resistance. That resistance will always be there. It's not foolproof, exactly what I said to the candles. It doesn't necessarily mean that it'll always stop the price from breaking through that level or support it from breaking through the below level, but it's there as guidance. And we can see this happening as we look out into the future. So for example, we marked this resistance. We're ignoring everything else here. The price moves up. It hits this resistance point right here. It kind of consolidates and moves sideways, and then we break up. But closer up to here, we can see that we did test it again, and the same ceiling held us from going higher. But now let's mark it out, you know, further into the future, like days into the future, months into the future. We get it to a high of 900, and now we start to trend way back down. And now we are back to this old resistance level. And you're saying, if you're seeing this right here, you're probably like, well, it didn't really hold. This is exactly what I mean, is that it's not foolproof, but it did test it. So let's zoom in a little bit. It did test this level. So this is the level we're looking at. I'm sorry, I keep moving in and out, but this is what we're looking at right now. If we zoom in, it did test that level, which is important to note. We came, we bounced, we tried to hold it, and it didn't hold it. And then obviously, eventually we were able to get above it. And guess what? We came and we tested it again. So if we had ignored everything from this point on and we marked this level out, every time it came to this level, we can kind of assume that maybe it would hold. And it did hold pretty well here. And it tried to hold here. And now, like I said, old resistance become new support. Same thing for the other way around. Old support becomes new resistance. We're trying to break through this old support because we're trading above it. If it's above this level, it's support. If we break below this support, it's now become a ceiling. It's now become a roof on top of our head, and it'll now be holding us below that as resistance. Alright guys, well that was a quick video. I just wanted to give a little breakdown of what candlesticks are and what support and resistance levels are. I'm going to be going into a lot more detail in the future, and soon we'll get you to a point where you'll have all the indicators that you want, all the studies that you want on your chart, and you'll be able to trade with the best of them. So I hope this video helped. If it did, leave a like, subscribe to the channel, check out my Twitch channel, and I'll catch you on the next one. Bye.